The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters in Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. We have a very special guest for you today, Ken G from KRI Partners. How are you, Ken?
I'm doing great. How about yourself, Tim?
I'm doing very well. So we're talking about multifamily investing today, correct?
We are. Yes, sir. It's all we do.
That's all you do. You know what? I find that when it's all you do it pretty well, right?
You know what? That's why we stick to what we know, right? We try to get better and better and better at it every single day, and that makes us specializing and very good at what we do, I hope.
Fantastic. Yeah, it's like, what do they say? Jack of all trades, master of none.
There you go.
So, that's it. So
Yeah.
So tell me, let's start at the beginning though. Let's talk about Ken for a second before we get into
Okay.
what you're investing in, how you find them, and
Yeah.
who this is for. How did you get into it? I mean, you and I had a little banter, pre-show banter, and and I discussed kind of what I had been doing in my 50 some odd illustrious years. And how did you get into multifamily investing? How did that come about?
Yeah. So I'll kind of tell you the story. So I grew up in Toledo, Ohio. I got my undergrad from the University of Toledo, moved to Cleveland, became a commercial lender. Well, I went to school at night at Case Western Reserve University, small private school in Cleveland. Got my master's degree in accounting. Decided, okay, after 5 years of being a commercial lender, I wanted to be a CPA. So that's what I did. I went to work for Deloitte for 7 years.
Nice.
Got passed the CPA exam, did a lot of M&A work, did a lot of state and local tax planning. Really, as accountants go, as CPA work goes, the fun stuff, right? I get to do the fun stuff. But what happened is, and by the way, during that time I had gotten married and I had one son. My daughter had just been born. And what happened to me, it was in the middle of the night. I was sitting with my daughter doing her night feeding, right? I was working at Deloitte, and that time was just so cool for me because that's the only time I got to spend with her.
Sure.
Which, when you think about it, that's not cool. The only time you get to spend with your brand new daughter is in the middle of the night doing her night feeding. Why? Because you're working like a dog as a CPA.
Right.
So I said, it started. What happened was my mind started to wander. I started to get frustrated. It started to really take away from the quality of that time I spent with her. As I just, sat with her, I just thought, man, I want to put you through school. I don't want to have a ton of student debt. I want to be able to spend time with you actually during the day. There's things that I want to do for my family that I just, I felt like I did everything right. I went to school, got a good job, doing everything right. And here I am, I can't see this thing playing out in my favor. And I said, man, I got to do something different. So I spent a lot of time and a whole lot of money trying to figure out real estate. This is in the late 90s. So, back then there weren't cool shows like this for us to listen to and to figure out how to do it. I had to go to local apartment association meetings and all kinds of really boring stuff. Right. But over a period of 3 years, I got to buy 3 small apartment buildings, like a 28, a 22, and a 24 unit property. And that was cool. I felt, I felt like I was learning it. And what happened 3 years later, I sold those buildings. And that's what really was the game changer for me. I see I'd made $500,000 selling those 3 buildings, $500,000 profit. So I'm like, wait a minute. I'm still a CPA. I did this on the side.
Right.
I made $500,000. I made more on the side than I had made being a CPA for those 3 years. And I thought, man,
it's amazing.
I sat there with my daughter. I couldn't figure out how to put her through school. I couldn't figure out how I was going to stop working so hard. Guess what? I not only now had a plan, but I knew it would work.
Yeah.
And so from that point forward, I said, you know what? I have got to stay focused on real estate. If I can do this in 3 years on the side, just imagine if I committed all my time and energy to it. And so, fast forward now 25 years from the day I started, I'm thrilled to tell you that we've helped hundreds of investors do exactly what what I was able to do. Obviously, I no longer work for Deloitte as a CPA. Deloitte's a wonderful company, but I no longer work as a CPA. This is all I do. And I've been able to put my kids through school. I'm happy to report I'm able to, I made it to all my kids' baseball and soccer and basketball games.
Fantastic.
All because I made that decision to change my life. So I know that's a long-winded answer to your question, but it really was a life changer for me.
Yeah, you should always share that, right? I mean, those are the stories we want to hear. I'll say this, and I'm okay with saying it. It's my show. I'll say it. There's enough negative stories out there to fill a million of these shows. So it's nice to hear a real success story. I loved hearing it, and thank you for sharing it. So let's get into the meat and potatoes of the whole thing. You said something in there that I loved hearing, that makes you feel good that you're able to do this for other investors now. So let's talk about the investor first. A lot of people, we hear the term accredited investor. So let's go ahead and define what an accredited investor is, and what that means, and why that's more your target market, or who this is best for.
Yeah, so it goes actually back to, everything's a story with me. Sorry. So what happened was, growing up, I had a very humble beginning, right? I grew up in 1,000 square foot, 3-bedroom, 1.5 bath house. It was a ranch. I mean, it was nothing special. I didn't have a country club Rolodex. I didn't have any of that stuff. Yeah. So as my career in real estate kept going, at some point I said, man, I could do this so much faster if I raised money and syndicated or used a fund structure to do that. I said, but here's the problem. I don't know a lot of people with money. And so I had to figure out how I was going to outwardly market what we do. And so when you look now at the SEC exemptions that are available, so there's basically 2 exemptions. One's called a 506B exemption. One's called a 506C exemption. So basically what it says is, it gives firms like ours access to regular people who want to invest, and it gives people who want to invest their money access to us. There's the Jobs Act of 2012 opened that whole process up. But under 506B, you could have accredited investors in your fund. You could have some non-accredited or accredited investors in your fund, but you couldn't outwardly market your fund, your syndication. And I'm like, man, this is tough, because my Rolodex is empty. I don't, relatively empty. I don't have it. So I got to do some marketing. Well, that's what 506C came along. 506C said, you can market, but you can only let accredited investors in your fund, or in your syndication, or in your investment, or whatever it is. So I wanted to tell that story as to how we got to that accredited investor part of it. Now, so what does it mean to be accredited investor? It means basically there's 2 rules. There's other little ones, but I'm not going to get into those. You either have to make $200,000 in the last 2 years and expect the same this year, or 300 with a spouse. Or rule number 2, you have to have a net worth of $1 million without counting your house. So if you meet one of those 2 standards, and you're able to just somehow do something to prove it, right? Usually your CPA writes you a letter or something like that, and we put it in our file. Then we can let you in our fund, let you into our syndication, and we're off to the races. So the SEC made a little carve out. I'd like to say, for guys like me who had to, really had to reach outside of his immediate circle of influence to try to find investors and to grow our company.
Yeah, and that's really for everybody's protection, right, Ken? I mean, the investor and yourself, as the company offering the investment, correct?
It is, yeah. So yeah, on the investor side, I mean, you want the investor to be able to afford to do the investment, right? Real estate's not a liquid investment. I mean, I think it's a wonderful investment, but you can't call me up tomorrow and say, okay, I want out, can I have my money back? I mean, you just can't do that. Yeah, right. Yeah, you can't do that. So it is important that the investor be, equipped and qualified in terms of financially. And then from our standpoint, it's important because we want to make sure that we're, if all of our investors were kind of living on the edge, right, and something were to go wrong with that, that's not a good situation for us as an investment firm, right? We don't want people to be in a position where they have to call us up and say, hey, you know what, I need to fix my driveway. Can I have some of my money back? See, that's not good for us either. We want, I'm all about matching investors and investments. And so that accredited investor criteria, that kind of goes a long way to help us match those 2 things up.
Perfect. So let's go from investor to property. I think that's where people get excited. Most of my listeners get pretty excited. How do you find your properties? How do you vet them? And are there parameters that you specifically look for that maybe others do not?
Yeah, of course. So in our world, everything starts with the market. Most everything we do is in the Sun Belt growth markets.
Okay.
We're really focused on Florida. So when you look at a market, we want demand to exceed supply. And we don't buy the top, we don't buy the Class A stuff, we don't buy the C- stuff, we buy right in the middle.
Right.
So if you look at a state like Florida, there's about 900 to 1,000 people moving into the state of Florida every day. That's net. Okay, that's a lot.
Yeah.
But here's the thing, they're building in Florida, you would say, but yeah, they're building Class A stuff.
Yeah.
So the people that are moving in, some of them are wealthy, but probably most of them are not. They're just ordinary people and they just want a nice place to live. But they're not building anything to accommodate that group of people. That's where the B class properties come in. We pick up a B class property, we can make it even nicer. We don't need to take it up to the A class status because some of those people, they can't afford that, right? We want to live in the middle. So we have this really big demand supply imbalance. And that's why we like that part of the market. We don't like the bottom part of the market because when there's recessions or anything that happens, it's unfortunate, but it's that part of the market that, those people get laid off. They're living paycheck to paycheck. And it just makes our investment thesis more risky. Right. So we always start with the market, and then the property itself, we're just looking for good properties in good areas that we think that if we were to make them nicer, we can increase rents, improve the quality of the property. And then in our world, in the multifamily world, if we're able, there's a pretty predictable relationship between more cash flow and more value, right? People are willing to pay for the cash flow. So
Right.
we go in and make it cash flow better, then the odds are that it's going to be worth more when we sell it than when we bought it.
Funny how that works, right?
It is. That's why I love it.
Yeah.
It's not like, there's a lot of investments out there that don't have cash flow supporting them,
Right.
Crypto and gold and some of those things, they just don't. And so their valuation is very different.
Right. Very different. That's a good word. Different. Not better, not worse.
Yeah, just different. I'll stay neutral.
There you go. Perfect. So let's get into how you find the property. I know you mentioned, the what you look for and the dynamics of the property. I'm talking actual physicality.
Yeah.
Boots on the ground. You have realtors. I've talked to other companies, and sometimes they have realtors that bring them deals. Sometimes they just have, internally in the office, someone on a computer all day, and they have parameters to go by, and boom, they found it. Let's go look at it, hop on a plane. How does that work in your office or for you guys?
Yeah. So in our world, it's all about the network.
Okay.
Most of our deals we get through a broker. We're buying 80 to 250 units. So it's possible you can find an off-market deal here and there, but in most of the good markets, there's a well-developed pool of brokers that are super aggressive. And what matters is our reputation. Right. And as a buyer, we raise funds, right? So there's a difference between a syndication and a fund. Right. We raise the money first, then go buy the deal. So when we approach brokers, we say to them, hey, we've already raised money. We've got money to spend. Brokers know they got a buyer that can buy. They know they have a buyer that's experienced. And because they've dealt with us before, we know that we're not going to run their seller around and try to retrade them and all that. So it's mostly the broker network that gets us our deals. And then oftentimes they'll find us a deal that is not marketed. That happens all the time, right? It just does because of our relationship. Brokers want deals done. That's the only way they get paid. And if they know we'll be fair with pricing and we'll treat their clients fairly, meaning their sellers, they love to give us deals. And then, of course, we promise that on the way out, when we're done, Mr. Broker, Miss Broker, you'll get to sell it for us too. They really like that.
Yeah, they really like that.
They do. Yes, sir.
So I don't know if I mentioned this, but I am located in Florida. I'm in West Palm Beach. I'm going to ask some Floridian
beautiful
questions.
area, man.
Yeah, definitely. I'm going to definitely ask some Floridian questions.
Okay.
So I'm aware of the numbers you were talking about, the influx of people moving to Florida. And I also understand the demographic and the geography of Florida and how, you know, the outer banks, what I'll call the coastal areas versus the inland areas versus the panhandle area. Is there a specific area that you find fits that B class versus A or C? And I don't mean to pinpoint like the state or anything like that, but if you could expound on that, that'd be great. I just love your take.
Yeah. So we tend to not buy in coastal areas.
Okay.
We try to stay 5 miles plus from the coast. I mean, you're in Florida, so you know the insurance market right now is just
I actually live right on the intercoastal, so I get dinged constant. It's a constant battle.
Yeah, no, it sure is. It sure is. So we try to stay inland a little bit. And then in terms of where there's B class assets, I mean, they're everywhere, man.
Everywhere.
They're everywhere. What's important about the markets that we look at is we like to have diversified income stream, right? So what we don't want to do is buy an asset sitting right next to Disney.
Right.
What we don't want to do is buy an asset sitting right next to the big, huge military base in Jacksonville. Right. Because it's dependent on one industry, and you know, depending on one of anything can really be a dangerous situation. So we look for more diversity. Now, I will tell you, I mean, as you know, we have a deal in Tallahassee. We're trying to get into Miami, Fort Lauderdale. I mean, it's just hard to find deals there. We're working on it, but those markets couldn't be more different, man.
Right.
I mean, just the feel that you get when you're in the neighborhoods and the people. I mean, it's night and day. And I like that about Florida because it gives me diversity. Our last fund, we put a deal in Tallahassee in the fund, we put a deal in Daytona, and we put a deal in Bradenton. Now, how's that for diversity?
That's diverse. That's that's a triangle. Yeah.
That is a triangle.
Well, kind of,
it's a little cockeyed, but that's all right.
A little cockeyed, yeah. But Bradenton, I could now we'll just sit and talk about beaches and cities and stuff like that. No, I'm kidding. But people are always shocked at how many, well, I'll say on both sides, people looking to move here and then people looking to invest, in properties. That's why I think having someone like yourself to handle that part, it'll make you go bonkers because there are so many areas and I'll tell you what, in the state of Florida, and I came from the state of Arizona. I'm not a native to Florida. I've been coming here since the 70s. Everybody knows how old I am, so that's no surprise. But the tripwires that there are in the state of Florida, that people can fall prey to, especially if you're an individual investor. So I definitely recommend, if you're someone looking to invest in multifamily in Florida, definitely look at someone who's put a fund together.
Look at us. Look at us.
You obviously agree. For sure.
Yeah, absolutely. Yeah, it's hard. I watch people trying to break in to buy, and it is very, very difficult. It just is because, it's like anything else. The world revolves around networks and relationships. It just does.
Yeah, it's a great state. I mean, I wish I would have moved here a lot sooner. But it is what it is. But there are a lot of pitfalls, and that's everywhere, right?
Of course.
And I mean, it's not like Washington State doesn't have pitfalls when it comes to multifamily. But I think because there are so many here, I mean, there's just a lot of opportunity. You go up and down the coastal, even 5 miles. You say 5 miles off. I think, I still think to everybody else in the United States, they'll be thinking that's still on the coast, 5 miles off the coast.
Yeah.
But here, I always tell my friends when they come visit, I go, no, that's not the coast. 5 miles, that's an eternity. I feel like I'm down Alligator Alley. I'm 5 miles off. That's not the coast at all.
Yeah. We have our property in Daytona is probably closer to the coast than that, but it's in. What I care about are flood zones and things like that. That's what I care about because nobody wants to be flooded.
No,
but you come back to it. It's really good to have that demand supply imbalance. That's what it is, and I keep looking every day and trying to figure out how can this break down. Like something really crazy has to happen. Like suddenly they impose a massive personal income tax. I don't think that's going to happen. right? And the sun would have to stop shining there. I don't know. The beaches would have to stop being beautiful. There's so many reasons that people want to be there.
Right.
I can't see it breaking down, and I can't figure out how they're going to build B-class assets. That's why I love it, because they're building the A stuff, but they're not building B because they can't afford to. That puts me in a perfect spot.
Wow. I never thought of it like that. That's pretty.
It's demand supply, man. It puts you in a bull market.
Yeah.
And now you just have to try to not screw it up, right? And you'll do really well.
Right. That's fantastic. Well, how would someone get in touch with you now? I mean, is the best way the website? Do they call? I mean, how if we have an accredited investor listening now and they're interested in what you have to say, and I don't see how they couldn't be, but how would they get in touch with you?
Yeah, go to kripartners.com/invest. And that'll give you access right away to, our fund webinar, all of our fund documents. I put a case study in there so you can see exactly what we did to a deal in Jacksonville. What did we do in terms of renovations? I take you through the whole thing. And of course, some investor testimonials and things like that we hope will find useful. But kripartners.com/invest is the best way to reach us.
Perfect, Ken. Well, Ken, I always say the same thing. You're the hit record. I'm the DJ. I'm spinning the hit record. So take us out the last minute. Whatever on your mind, your heart, your soul, you want to share with those out there who are looking for an investment, or the story that you started with at the top of the show about finding a way to spend that time with your family, whatever you feel that the listener needs to hear.
Yeah. So I've had a lot of time to talk to various investors about a lot of different things. And the number one thing that I always hope to do is to change someone's life. And the best way I know to do that is to remember, I'm a CPA, I'm a numbers guy by background. Right. And that is to show them a way that you can put your family and yourself on a wealth building plan that isn't, I can't say it's guaranteed because nothing in life is guaranteed. But I look at this as a wealth building plan. It's not a get rich quick scheme, but it's a get rich almost for sure thing, right? So I've done the math on these investments, and you just, you put money in one investment, then you just keep rolling it over. And after 10, 15, 20 years, you can easily turn 100 grand into $1 million, 2 million, 3. I know because I've done it. I've done it for our investors. And if you think about that, if I can convince a couple people to be more disciplined about how they do that and the plan they put themselves on, in 20, 30 years, their kids are grown. Now they can really, really make an impact on their family's life because they will have accumulated a great deal of wealth. So if I can do that, when you have the wealth that you need, everything else, you have now a lot of choices. Right? You can spend more time with your kids. You can spend more time with your wife. You can spend more time with your grandkids. You don't have to put up tons of student debt to put your kids through school. So that's the message I would love to leave your listeners with. Just really look at this investment, what we do, look at it very seriously. Whether you do it with us or not, it doesn't matter, but do it because I can't find a better way to really grow long-term wealth.
Sage advice, Ken. Thank you so much for being on the program today. I really appreciate it. Ken G, KRI. Ken, I look forward to catching up with you over the next 3, 6, 9 months. This has been a great conversation, and definitely, obviously, I want to hear more about Florida investments, and but definitely like to have another conversation down the road.
I would as well. Thanks so much for having me, Tim.
Have a great rest of the week. Be safe.